Chris Viale is our first panelist. Christopher is the President and Chief Executive Officer of Cambridge Credit Counseling Corporation. He is responsible for all aspects of the day-to-day operations of the organization, including oversight of all human resources activities, educational initiative, financial counseling, and counselor training. He also serves as the co-chairman of the Board of Directors for the Financial Counseling Association of America. Christopher, we'll turn it over to you.
Thank you. Good morning, everyone. I want to start off by thanking the CFPB and especially Vanessa McGough for all the work that she did to put this together. I've been given 6 minutes to provide a high-level view of the work that 501c3 nonprofit credit counseling agencies do to help and support financially distressed consumers. So basically, 6 minutes to summarize my life's work. So I'm gonna stick to my prepared comments. Otherwise, I would take 20 minutes. So. Okay, our industry's nonprofit agencies provide a wide range of financial education and counseling services to consumers. The focus of my time this morning is on our budget counseling sessions and the mechanics of a traditional debt management plan, or DMP. Consumers most often reach out to us because they're struggling to make payments or pay down their unsecured debt. They are typical hard-working Americans who've had a financial setback or mismanaged their finances and are looking for a way to safely and responsibly pay back what they owe. Their average income is roughly $40,000 to $50,000, with unsecured debts of $15,000 at an average interest rate of 23%. Their average FICO score is 620, 35% are homeowners, and 70 to 75% are considered low to moderate income individuals, LMIs. The most important step in the process for us is our budget counseling session. Our independently certified credit counselors will do a deep dive into the consumer's financial life. The session is free and can take anywhere from 30 minutes to over an hour based on the complexity of the household situation. We're required to capture every possible expense, including the kind of one-offs typically experienced by families with children or who are caring for their elders. Advice and guidance on ways to cut or eliminate some expenses will be part of this counseling session. This will help develop the actual expense picture going forward. All forms of income and financial support will be gathered, and a soft inquiry of their credit report to download their creditor information into our systems. Through this process, the counselor will have an accurate picture of the consumer's situation so we can provide appropriate and specific advice as what they should do going forward to address their debt. So in many cases, the budget counseling session helps identify potential reductions so that the consumer can pay down their debt on their own. Some consumers are in a position where they should consider getting advice from a bankruptcy attorney. They just don't have enough income to handle the debts. While others have assets they can consider to liquidate to repay their debt to be able to move away from it. And then roughly 50% of the consumers we counsel are in a position where our debt management plan is a good option for them. Of that 50%, roughly half will move forward with the DMP. Some consumers decline enrollment because of the possible negative impact on their credit, since enrolled accounts will be closed. Some consumers aren't ready to give up their credit cards, or they just wanted a lower payment. The newest and biggest trend is confusion of why they don't join. They have heard and seen ads on TV and on the radio that tell them they don't have to pay what they owe. So when we're telling them that a debt management plan is the full repayment of principal, they get confused. And unfortunately, sometimes we don't hear back from them. So how does a traditional debt management plan work? It's a full repayment of the consumer's unsecured debt within 60 months, usually accomplished with the help of generous concessions from the client's creditors. After a consumer enrolls with us, notifications are sent to each of their creditors. The creditor then closes the account and grants concessions, typically including a significant reduction in the interest rate, lower monthly payments, elimination of late and over-the-limit fees going forward. Then the client will make payments to the credit counseling agency, and the agency will remit payments to their creditors on a monthly basis. After the third or fourth payment, the account, if eligible, will be re-aged or marked current on the consumer's credit report, starting the rehabilitation of their credit score. There are no negotiations, as all major creditors have established preset guidelines based on the consumer's level of hardship. This makes communicating all aspects of our plans prior to enrollment very easy. There's no guesswork. It's a very safe and sound way for consumers to repay their debt. The biggest limitation of our current DMP model is our ability to meet the consumer's need for lower payments. Debt management plans have been limited to 60 months or less by an OCC bulletin issued to the banks back in January of 2003. We've been in discussions with the OCC and the CFPB and have been advised that we can move forward with a pilot, which would be a 72-month DMP to extend timeframes to lower payments to help more consumers. We're in the planning phases as we speak. So client success. Once a client's on a DMP, agencies employ a variety of support systems to help them become better managers of their own money. We offer ongoing financial education and budget counseling, customer care specialists, money coaches, online access to their information, apps designed to help consumers live within their budget, and we also budget a small amount for savings and urge our clients to find ways to save more. They have to have money set aside for those unexpected expenses and emergencies that will happen during their course of repaying their debt. Behavioral changes don't come easy, so we pull out as much as we can to try and help our clients. And my last points are the typical results of a DMP. So our average client will experience a reduction of interest rates from, on average, they're being charged 23%, which drops down to 7-8%. Their monthly payment is lowered roughly by 30%. The average projected term of a DMP on the onset is 50 months, but clients who pay in full do so on average in just 45 months. The average fee that we charge for enrollment is $40. The average monthly fee charged to handle the account and process is $30 a month. Both of those fees are set by state law and are reduced according to clients' ability to pay. The client's credit score generally drops 40 points after enrollment and takes up to 12 months to recover. For graduating clients, the average score increases 80 points, or 40 points higher than where they were when they started the program. And finally, 60 to 70% of clients who enter a DMP fully repay their debt. Thank you.